Hello, everybody. Welcome. Tesla is down 2.3%, down below PE ratio of 43. It was down more earlier, but in the last few minutes, it's gone up a little bit. Stock markets are up. NASDAQ up 1.5%, S&P 500 up 0.9%. The yield curve is back up about 20 basis points today. 10-year Treasury yield is at 4.05%, 4.05%. Employment report came in stronger than expected, at least on the surface. Non-farm payrolls for January added 353,000 jobs. That's a very strong number. Non-farm private payrolls, 317,000. Average hourly earnings up 0.6%, double what was expected. But the average work week dropped from 34.4 hours to 34.1 hours. That's a big drop on the average work week. I'm going to look into what happened there later. Oil prices are down 2% to 72 handle. And University of Michigan consumer sentiment final read for January came in at 79, more than expected. Let's see who's in the space right now. All right, I'm going to read this article about Reuters, about the regional banks. At the top of your screens is the article. Investors lulled into thinking U.S. regional banks were out of the woods after ruptures last year have been given a jolt by New York Community Bank. The under-the-radar lender's earnings report sparked a sell-off in regional bank shares in a warning for investors that had grown inured to the sector's sensitivity to high Federal Reserve interest rates nearly a year after two banks failed. While New York Community Bank's confluence of problems are unique to its balance sheet, elements of its earnings underscored regional lenders' ongoing sensitivity to high Fed rates, which continue to squeeze commercial real estate portfolios and lending margins, investors said. That pressure will last longer than expected after the Fed held rates steady on Wednesday, prompting traders to reprice the first rate from March and into May, according to futures data. There still is an underlying business model problem that is affecting a lot of regional and community banks in a higher rate environment, Lazard, chief executive, said. Those problems had exited crisis levels, but they were still there, said the person, who previously served in the Obama administration as director of White House Budget Office. Okay. The sell-off comes nearly a year after Silicon Valley Bank's March 2023 failure, when high interest rates drove paper losses on its bonds, sparking a fatal deposit run that felled Signature Bank days later. New York Community Bank snapped up Signature Bank's assets, pushing its balance sheet over a $100 billion regulatory threshold that triggers strict capital and liquidity rules. That led the bank to slash its dividend to retain cash. But New York Community Bank also posted a $185 million loss after putting aside cash to cover two sour loans on a cooperative and an office. Quote, that caused the street to be more concerned about the negative impacts for all banks, end quote, said a portfolio manager for Gabelli Financial Services Opportunities ETF, which holds several bank stocks. quote, continuation of both factors, a more hawkish Fed and worries about commercial real estate impacting sentiment on banks, end quote. The sell-off seemed to catch investors by surprise, with traders holding bullish positions in options on the SPDR Regional Bank Exchange Traded Fund ahead of Wednesday. Other banks with high CRE exposure, according to data from S&P Global Market Intelligence, have also seen their shares hit, including Valley National Bank and East West Bank. The two banks did not immediately respond to requests for comment outside of business hours. New York Community Bank's chief executive said on an analyst call that the co-op loan was a one-off, while the bank said in its earnings release that allowing for losses strengthened its credit profile. We believe as the market continues to appreciate the value-enhancing actions New York Community Bank has taken, the share price will recover, said a spokesperson in an email to Reuters. The bank also reported a 16% decline in net interest income, the difference between what lenders earn on loans and pay on deposits, and a core driver of regional bank profits. While high interest rates have allowed banks to earn more on loans, they have also had to pay more to retain deposits, squeezing net interest income. Interest-bearing deposit costs rose 29 basis points quarter over quarter, according to JP Morgan analysts. Lower net interest income will contribute to markedly lower profitability, another analyst wrote. Many other regional banks reporting waning NII during quarterly earnings, and analysts expect their profitability will continue to be squeezed on rising deposit costs. Some investors, though, noted the CRE market is extremely diverse and that not all CRE exposure is created equal. Others said many regional lenders have solid balance sheets and sufficient reserves to weather high interest rates a little longer, and that the sector will benefit from the U.S. economy avoiding a recession. I think this is an opportunity to buy into select banks, said Tony Roth, Chief Executive Officer at Wilmington Trust Investment Advisors, which is owned by regional lender M&T Bank. Certainly, I wouldn't buy the index because there are some regional banks that have more troubled assets than others within the commercial sector. So I think one needs to be selective. Okay. So this is a pocket of some systemic risk in the economy. We'll see if it materializes into something more. But I know that the Fed said that they're going to end a loan program for these banks in March. So we'll see how that shapes up. I pinned at the top of our screens a chart by Charlie Bilello, who shows average price of a used Tesla decline from nearly $68,000 to less than $35,000 in the last 18 months. And it continued to decline in the last few weeks. It's a more than 10% drop from nearly 40,000 to less than 35,000. Joe Tegmeyer shows at the top of our screens West Supercharge Station growing much larger with prefab superchargers delivered. Parking garage getting concrete poured on the top level. Many Cybertruck castings, front and rear, on the northeast corner. Roof repairs over the 4680 section underway. Rash test facility, new south concrete slab, and a new temp loading platform. And you can see here in one of the pictures, Cybertruck castings. I think the estimates for the production rates right now is in the dozens per day range. Dozens per day. Sawyer posted at the top, Tesla has announced that Giga Berlin built 6,000 Model Ys in 1 week. So that will decrease COGS per unit, hopefully, in Berlin. And we should see the same out of Giga Texas in the coming days, weeks. Sawyer also says Tesla has reduced the APR percentage for financing in the US, the first drop since earlier 2023. The slight decline, 72-month loan is now 6.5%, down from 6.6%, and 84-month loan down to 7.5%. Tesla also dropped Model Y prices in Canada up to 7% or 4,000 Canadian dollars. And my understanding is that this price cut allows Tesla to qualify for a major tax incentive in Canada. The Canadian market is pretty small, so not sure if this is going to be um, material for the results. I pinned at the top $12,000 rebate in Quebec, so it's only one in one region of Canada. Tesla has made another round of price cuts, this time on the Model Y and only in Canada, reducing the price of the electric SUV by $4,000 Canadian dollars. Most importantly, this means the Model Y long range now qualifies for a combined $12,000 in rebates if you live in Quebec. According to an update to the design studio on Thursday night, the Model Y rear-wheel drive and long-range variants both saw price reductions, while the price of the performance variant stayed the same. There's a Reuters article on Tesla to recall nearly all of its vehicles in largest ever recall. Omar posted that as they made a minor change to the icons over the over-air update, and Elon replied literally. Let's see if there's anything else in the article. We talked about this potential recall yesterday. I think Omar mentioned it. There's another article from Reuters called U.S. Auto Safety Agency upgrades probe into Tesla power steering loss. So let's read this article real quick. This link is at the top of our screens. U.S. safety regulators have upgraded their probe into Tesla vehicles over power steering loss to an engineering analysis, a required step before the agency could demand a potential recall. The National Highway Traffic Safety Administration, NHTSA, on Friday said the investigation covers about 334,000 Model 3 and Y vehicles from the 2023 model year. The agency's upgraded probe follows a December Reuters investigation that found tens of thousands of Tesla owners have experienced premature failures of suspension and steering parts over at least 7 years, citing Tesla documents and interviews with customers and former employees. Some drivers reported harrowing tales of sudden power steering outages at speeds that nearly caused accidents. The Tesla documents showed that the automaker sought to blame drivers for frequent failures of suspension and steering parts it has long known were defective. Tesla did not immediately respond to a request for comment. The NHTSA, which had opened a preliminary evaluation in July into loss of steering control in 280,000 Tesla Model 3 and Y vehicles after 12 drivers reported problems, said it has now identified a total of 2388 complaints. 2,388 complaints. Some Tesla owners reported an inability to turn the steering wheel, while others reported an increase in required effort. The agency said it had linked one crash to the investigation, in which a driver couldn't complete a right-hand turn at an intersection and struck a vehicle. Tesla and NHTSA jointly inspected the vehicle. Some drivers told NHTSA that the steering issues continued until the power steering rack was replaced. NHTSA said the probe will examine the conditions leading to and resulting from the steering rack failures. It remained unclear exactly what parts might need recalling or replacing to prevent the steering outages. Tesla has addressed some other issues with remote software fixes. The automaker could face a much more expensive recall if NHTSA required repairs or replacements of physical parts. Tesla has had 9 recalls in the US for steering and suspension failures since 2018, NHTSA records show. Most affected a relatively small number of vehicles. The largest, in 2018, involved replacing steering rack bolts on more than 70,000 mile less vehicles because of the risk that corrosion could cause a loss of power steering. NHTSA said it is aware of over 50 vehicles allegedly towed as a result of the condition. A portion of drivers described their steering begin to feel notchy or clicky, either prior to or just after the incident, NHTSA said. NHTSA's move comes on the same day Tesla said it was recalling 2.2 million electric vehicles, nearly every one it has sold in the US, because small font sizes on warning lights increase the risk of a crash. No crashes or injuries have been reported. Tesla began releasing an over-the-air software update on January 23 free of charge to fix the issue, the regulator said. The software update will increase the font size of the visual warning indicators for the brake, park, and anti-lock brake systems. Just 2 months ago, Tesla recalled 2.03 million vehicles in the US to install new safeguards in its Autopilot Advanced Driver Assistance System. Consumer Reports said that the new Tesla safeguards are insufficient. So a couple of different recalls going at the same time. New York Money Hawk says, according to Troy Teslak, the Berlin production increase is a one-off due to working weekends before the shutdown. Troy replies and says, correct, the production rate was 4,092 a week in Q3, 4,460 a week in Q4. Based on the design capacity of the machinery, it should max out at 5,000 a week with 2 crews. They could add a third crew to increase the production, but it's not needed because demand is limited. So the bulls are talking about the 2.2 million software upgrade. Bears are talking about the other one. And there's no overlap between those two groups. Interesting. Tesla down 2% to $185 per share, exactly 43 PE ratio, market cap of $580 billion, $550 billion after you take out the cash. Serene posted, replied about the price cuts in Canada and now qualifying for additional incentives in Quebec. We talked about that earlier. Serene, thank you anyway. Troy Teslak says 6,000 a week production in Giga Berlin is due to working of the weekends as one-off, he says. Tesla settled its California hazardous waste lawsuit for a $1.5 million fine, Sawyer says. Welcome, Machine. How are you?
I'm doing well in general. Feeling a little conflicted investment-wise.
Why?
I think it's mostly, and I think I wouldn't be surprised if other people feel this way. Of course, seeing how other companies are performing and realizing just how dumb it is to be invested only in this company, given the growth trajectory. And I don't know.
Can I ask you a quick question before you go
Yep.
on? What do you think about this power steering loss engineering upgrade? Is that immaterial? Why is nobody talking about it?
I
Am I missing
yeah,
something? How am I supposed to think about these
I
things?
sorry, I haven't been. I've been busy all morning, so I haven't heard anything about this.
So there are two recalls today. One of them is about the font size of warnings, and that applies to the entire US fleet. The second one that came out earlier this morning is about power steering loss investigation being upgraded to an engineering whatever, like the step before a recall is issued. And that applies to about 300,000 Model 3 and Model Y vehicles built in 2023. Now, everybody is talking about the 2.2 million and making fun of the word recall, that it's just a font size, like this is so dumb, etc. Oh, that's all the bulls echo chamber. And then the bears are talking about the other one. And nobody's talking about both. Like even Sawyer doesn't have a tweet on the power steering loss engineering upgrade. So is that because it's so immaterial that we're not talking about it, or is that something that's kind of fell through the cracks? It sounds like you didn't even know about it.
Well, I haven't gotten through my, um, let's say, my normal process of reading the news um, since yesterday. So that may be one reason why I haven't seen it. But I mean, this is definitely an endemic problem in that investment community is ignoring the actual bad news. And this is what pissed me off from a year and a half ago on Troy being signaling that the demand was dropping for these vehicles and everyone just totally blowing them off and it being utterly destructive to a lot of people's investment portfolios. And that's something I just really, changed me. I would say, obviously, I was affected too, and that's my own fault. But just in terms of my mindset, and so this stuff now, like, yeah, if there's like I saw the font thing, and I was like, whatever. I saw it yesterday because I saw Green the Only posting updates on the font, the icon changes, and I was like, whatever, it's software update. But if there's a hard recall or whatever, an issue that's hardware that you're not going to be able to fix with software, then that's a huge issue potentially, costly. I haven't, I don't even know the details, right? But how could you ignore this? This is like you can, it's money. Just go calculate it. 300,000 cars have to come in. I don't know how much it costs to replace. You know, is it a big deal or not? I don't know. Go, at least go through and the numbers and figure it out, right? Don't
I guess
ignore it.
we're talking like hundreds of millions of dollars range. I think
Yeah, so
it's only
that's
2023 build, Model 3 and Model Y, right? So it could be a couple $100 million. So in the grand scheme of things, I guess it's not that material, and you can deduct that from your taxes, right? There's a right?
I think. I'm not aware. You would know better than me.
Yeah, probably.
So,
So a couple $100 million range. So I guess it's not
but
that material.
it's definitely not nothing
It
though,
talk it
right?
it talks more about quality issues, I think.
Yeah.
Yeah.
So yeah, I mean that's something to definitely talk about, right? And if they're not, it just shows you these people aren't trustworthy to rely on for advice because you need to have
Who is
clear-headed
these
people.
people?
You're talking about the Tesla community. You're saying you don't hear anyone talking about this recall.
I wouldn't go as far as saying they're not trustworthy, but I
Oh,
think
they're
it's just
not.
kind of it's a it's an indication that there's an echo chamber. Huge,
Yes,
huge.
I agree.
Anyway, um, what do you want to talk about? You were going off about your valuation.
No, I'm just thinking in general
Why didn't you
how
do your thinking before buying leaps?
well. Again, I thinking more. Hold on.
The wife walked in. She's like, "Why are you still on these spaces with these weirdos?" Post in thread. Tesla wants $4,000 to remove and replace the steering rack. Does this sound right? At the top of your screens from Joel. TeslaMotorsClub.com post. $4,000. I mean, I guess it could lead to several hundreds of millions of dollars of cost, but it's a one-time thing. The bigger issue here is the quality control, obviously.
Man, can you hear me?
Yes.
Yeah, no, I just wanted to comment real quick because I was curious about what you were saying about the recall, the steering wheel wreck. I looked it up real quick, and it looks like it's an investigation um, that is going to happen, but it's not like an official recall, so maybe that's why it hasn't really hit the bull community just yet. But yeah, no, that's a good point. But I think it's we get investigations all the time, and who knows what's gonna come from it. So I just wanted to share that.
Yeah, that's what we said too. Engineering investigation, which is supposed to be the step before a recall, correct?
Yeah, yeah. I don't know what the steps, how that process takes place, but I just know that we get FUD and investigations all the time, and knowing the history with the company, I know it can lead to nowhere, but it could also be become material. So yeah, no, I agree. It's important, but maybe that's why it hasn't really hit the you know the X much.
Okay, thank you. And where would you estimate the cost if this gets upgraded to a recall? Where would you estimate the cost to Tesla?
Um, I really don't know. Wouldn't be able to estimate it. 300,000 cars sounds like a large number, but I think it's not as bad as it could be. It's just 2023, you said?
Yeah, it says 2023 builds of Model 3 and Model Y, but obviously it doesn't, that doesn't mean it can't expand beyond those two models or beyond that model year. So it depends.
Yeah, yeah. No, I don't have an estimate, but yeah, it's a good one to follow. Thanks.
Yeah. Yeah, I mean these like you said, these things happen to every automaker. It's part of the um industry, I guess. And Tesla has, Larry Goldberg has pointed out many times that Tesla has ample warranty reserves. Um, who knows if this is going to be covered by those reserves or if Tesla is going to have to take additional charges. So lots of details to come. It can be material, but it's too early to say, like Andres said. I think that's a good summary.
Yeah. Thanks, man. I love what you're doing here, man.
Thank you. Thank you. Appreciate your support. Any questions, comments, please request to speak. Otherwise, we'll end the space. Just for fun.
Hey, how's it going? I was wondering, this is pretty random and I just joined, but do you think it's right that sort of just purely economically speaking, based on incentives, that ever since Musk achieved his all the milestones for his last compensation package, and I did a quick search, I'm not sure if it's right, but I think he achieved it in like 2022. Do you think it's right that essentially he has essentially had a disincentive to increase the stock price until he gets his new comp package?
I mean, technically that is correct.
Yeah, I guess is it both because the strike, if a new package is options, the strike price, he wants to be as low as possible, and of course he doesn't want the whatever the baseline is to be higher than it otherwise could be.
Technically, what you're saying is correct, as far as I know. Okay. Good luck trying to find someone who's going to say that, what you're saying, and conclude that is the case. Profound value.
Yeah, can you hear me?
What's your question?
Yeah. I've been got everything invested in Tesla and have done since 2018. So I've been following everything on Twitter since then and continued to invest. I was just thinking about the narrative with Elon now and how he's, as we all know, just doesn't talk up as much Tesla anymore. Do you think that's because he's so confident that Tesla's just going to, smash the ball out the park anyway, and he just thinks that we've all just got to be patient and everything will be okay? Or do you think that's because he's genuinely distracted and doesn't have the time anymore to talk up Tesla as much?
Yeah, I'm not sure what your question is. Okay. Just for fun. So I see Wes in the crowd. If you could please come up, I would love to ask him about the engineering upgrade and how he thinks about these things. Just for fun, what's on your radar these days? What are you thinking about? Is it mostly Elon's compensation plan or other things on your radar?
No, I mean, I think just generally, I feel like we're just in this sort of lull period. There's, I feel like FSD 12, Omar's saying it's great. It looks great, but, even he's saying that the disengagements are, critical disengagements are higher than the last, 11v11 version. So, and it was, I think, August maybe when Elon did his live stream. And so, you're talking several months to get to this point. So it's really unclear to me how long it's going to take for, FSD 12 to really roll out and then us to know, okay, is this really accelerating? I feel like, it could be several months for FSD. Optimus, I'm super optimistic, but it's just, and it seems like they're moving really quickly, but that's just going to take time too. And then, obviously with the auto business, Cybertruck is going to take some time to ramp up.
Just 1 second. Just for fun. While Just for Fun talks, Wes, would you please look at the article at the top? I'm going to ask you about that article, what it means.
Yeah, I'll take a look.
Thank you. Just for fun, go ahead.
Yes, so it's sort of, the main drivers, I feel like FSD, Optimus, next gen vehicle, super optimistic on all of these. It's just, it seems like these aren't going to move the stock in the next, like, probably 3 months. And then energy seems like it's doing well. Hopefully Q1, there's like continued growth there, and that can, maybe Wall Street starts to take more notice and starts to project it out. And then on top of that, I've just, with all this stuff about Elon's comp package, just based on, all the everything going on, plus just some of, I guess, Elon's actions in the past, it's made me think more about how much has that mattered, and like, uh, should I be a bit wary until that comp package gets all sorted out, and then it's maybe off to the races. It's like maybe 3 to 6 months from now, 3 to 12, or somewhere in the next 3 to 15 months, sort of we see progress on all of these 4 issues sort of I was talking about, and then maybe it's off to the races. But for the next few months, just and in particular, it's just frustrating with this comp package. I'm sure it'll get sorted out, but it's like literally Elon may not be incentivized to, um, have the stock move at this time.
Yeah, like you said, Elon has had this similar, disincentive in previous periods. So, I wouldn't equate it. Like, I think it's just, okay to point out that yes, there is a disincentive because of the stock option strike prices. But if you believe that the CEO of the company you're investing in is going to act in that way, then you probably shouldn't invest in the company anyway. You agree with that?
Yeah, I think it's just, I think it's right that, like, you can't imagine that Elon would like actively block progress, or like not spend energy that he otherwise would. But I guess it is one sort of additional, it's one negative factor, I guess, that's there. Because I guess as a
Okay.
comparison,
There's no, I mean, got it. There's no like point in continuing to speculate about this. You point out the incentive structure, and we can move on. Wes, what do you think about the article at the top? U.S. Auto Safety Agency upgrades probe into Tesla powering steering loss.
Yeah, I haven't read the entire probe, but I was seeing that there were, it sounded like hundreds of complaints about power steering loss. Is that correct? And I can talk to that.
Yeah, I'm not sure if it's hundreds or thousands.
Yeah, even if it was.
Apparently, there was one incident that the agency linked into the issue, a crash where no one was hurt, but the guy was trying to, I guess, turn right and couldn't, what have you. So it seems, I guess they have evidence enough that they upgraded to an engineering investigation.
Yeah.
Right.
Yeah. Well,
okay, so you've probably seen these before when you were working there. You've gone through them. So what's the process like?
So from the engineering side, I can talk about that because I never got past the engineering side because it was extremely obvious that it wasn't an engineering failure. So the NHTSA cares if it's not an engineering failure or you can't prove that it was or was not an engineering failure. Does that make sense? So at the end of the day, the engineering of the vehicle has to exonerate itself from the issue. So, and excuse me because I'm driving, so you'll hear driving sounds, is that from an engineering standpoint, steering is monitored over the CAN bus, which is the way that it communicates data and feedback. And it's the way that autopilot communicates its signals as well. And that CAN bus runs at a specific hertz, which means it has a specific amount of samples that go back and forth. And that all gets into a log. And so you can tell the difference between when the AP computer tells the steering to do something versus the driver putting explicit input in. And you can see that the EPAS, the electronic power assisted steering module, the little motor that helps you steer the car, has input. So if you're following me so far, great. If you're not, just ask questions. But that all gets put into a log, and it says that it's doing what it should, and it has redundancy. So there is an ECU, a chip, and compute on the car that checks to be sure that steering input matches the output and all that. And if those are mismatched, then it throws an error, and it basically makes the car stop. If the autopilot computer is driving, but if the person is driving, then it throws an error and tells them like right away. So this would all appear in the logs, and that's what they can look at when this person said that they lost steering. Now, if that doesn't appear in the logs and they can see very explicitly that the steering was being inputted by AP or was being inputted by the user, then they know it wasn't the car's fault. In other words, engineering worked as designed because it was explicit input from the driver. So that's what they'll look at. And we never got any further than that because it was always driver error that caused the crash. And Teslas are very unique in that they have all these cameras that can see that that's what happened. Like they can specifically see this from the cameras, is that the explicit input was there from the driver, and then the car did what it was essentially told, and the crash occurred. So there you have it.
Thank you. So the potential liability sounds like it's in the several hundreds of millions of dollars range. What do you think, given what we know so far, what do you think is the probability of that potential liability materializing?
Yeah, so back when I was there, we didn't write any specific code for ePass. What we did is that monitors or handles functionality. We only sent signals to ePass through autopilot, and we did the bootloader. In other words, we could reflash ePass, but ZF, the largest maker of ePass systems, they were in control of that code. So if there was an engineering fault and that was in the code itself, then that liability would essentially fall to Tesla through ZF. So very similar to how the GM LG thing happened with the Bolt. GM just basically passed that on to LG, and they ended up paying the fine. Does that make sense?
It does. Thank you. Gotcha. Okay.
And
So,
I think that it's still that way. I don't think Tesla is writing ePass code. I don't think they would be liable in that sense. The likelihood of that happening, just so you know, like that code is extremely redundant, and think it has 3 levels of redundancy inside of it, and it's clocked at 1,000 hertz. In other words, it's down to the millisecond. And so it's continually checking itself. The likelihood that there would be a complete failure is extremely low. Like we're talking in like the tens of billions of miles. And that's like per ePass. Like that's per vehicle. So I highly doubt that that happened. From an engineering standpoint, the likelihood is, you'd have to get struck by lightning, jump through a flaming hoop, and get attacked by ninjas from Uruguay all at the same time. Like it's never going to happen.
all right, that's very helpful. Thank you very much.
Yep.
That's really helpful. Yeah, thanks for coming up. All right. Any other questions, comments? Otherwise, we're going to end the space just for fun. Anything else on your side?
I don't think so. I think thanks for letting me air out my questions, concerns.
I mean, are you that concerned that you're going to sell your shares? Like you knew this was coming, right? I mean, you knew that there's always the agency risk with CEOs in any company.
Yeah, I think it's certainly not like, I'd sell my whole position or anything like that. I think, I've just been looking for like up to, for like, I don't know, maybe the last 2 years, I've been waiting for the moment when I'm like, okay, FSD is really going to take off. It's like the data is there. And unfortunately, it's taking longer and longer. And then just more recently, with all the, all the stuff with the court case, it's just, made me refocus a bit on the comp and like the, it's like, if you believe incentives matter, then unfortunately right now, obviously Elon has a huge incentive with his existing stock and like he cares a lot about Tesla for sure, but he doesn't have like, this new comp plan for now, unfortunately.
How do you think it's going to play out in the coming weeks and months and maybe years, actually? Let's say, for example, let's assume for a second that, um, you know, the board goes back to the whiteboard, and devise a plan that Elon doesn't like, that Elon finds insufficient to achieve his goals with SpaceX and other companies. How do you think that would play out?
At the end of the day, I don't think he would, I certainly don't see him leaving Tesla anytime in the next, few years, at least until, significant progress is made with both FSD and Optimus. Yeah, I feel like the most likely path is the board, they come up with a new comp plan. I guess the thing I'm not sure about is this the judge decision. It was based on, I think, a lot of sort of saying that Elon had too much influence over the previous comp plan. And so if the board, when creating the new comp plan, has to have less influence, are they going to have as aggressive a plan as I otherwise would? Because I feel like for me, I love the last comp plan, and part of my investing was that, hey, they have this crazy target of 650 billion. I think that's what it was, like the top end. And so, if you invested when they're at, 50, 60 billion, you knew that management has this crazy target out there. And so, I would love for them to have, a new plan that targets whatever 5 trillion, something like that, 6 trillion. And so that's there as a target.
Okay, but I was asking. So okay, so the question was, how do you think it's going to play out? So you're saying he's definitely not going to leave, and they're probably going to come up with a plan that's in trillions of dollars of target.
No, I'm not
Wes,
saying
do
that. I'm
you
not saying
agree?
that. I want them to do. I'm just
Okay.
not sure.
Okay,
Yeah.
but the question is, what do you think is going to happen, not what you want it to happen? So if you don't want to answer the question, just leave it at the answer to the extent that you answer the question, and then just stop.
Fair enough. I think the quick answer is, I think they'll come up with a new plan. I just don't know, will it be that, aggressive multi-trillion-dollar plan?
Okay. Wes, do you agree with just for fun that the probability of Elon leaving out of this conundrum is 0?
Yes, I agree.
Okay. Joey, do you?
I don't assign much to a 0 probability. No.
Yeah, I don't think it's 0 either. I
I'm
think
not
it's less
saying
than
0.
50%. That's what you said, bro. That's what you said.
I did not say
All right.
So
0.
can I tell you why?
I think highly unlikely.
Let's take a break. We should take a break just for fun. I think maybe take some time to consider about how you say things, what you say, and then come back up. Wes, go ahead.
Yeah, just to tell you why. Like, I've sat in front of him so many times. I don't see him giving up on Tesla, because that would mean that he would have given up. Because if he isn't CEO, this is why he wants a controlling share, voting shares. He sees this as like his life's mission, so he has to do this, and he's going to accomplish it. Whether the court decides this or not, there will be a new comp plan. It'll take time, They'll reincorporate in Texas. That'll take time. And just like FSD and Optimus, everything takes time. He predicted the Model Y. That happened. Best-selling car in the world. Like, that was unheard of when he made that prediction. It sounded crazy to me. And I just, like, he will accomplish it. It's just going to take time. And yeah, FSD is taking a lot longer, now that I'm 9 years separated from the code. It's hard to explain until you like sit in front of him and hear him think, in an engineering meeting. Like, he's not going to give up. And the board is still the board. They're not changing. They will come up with a new comp plan. They will make that decision, and the proxy will occur. The verbiage will be such that it meets all of these new, I guess, Texas regulations. And there'll be a vote, and we will approve it, more than likely. And it will be the largest comp plan ever, just like the one in 18 was. And he will knock it out. And I'm hoping the comp plan is somewhere in the range of like 3 to 5 years. And I'm hoping that he'll accomplish all of those tranches within, 2 to 4. And that's kind of my expectation. I just see him doing that. I don't see how he won't, honestly.
Yeah. I agree with everything you said, except the part where you say it's 0% likely that he's going to leave. It's 0%. I agree that it's less likely than not. I think it's less likely, less than 50% probability. Probably much less than 50% probability. But there's a scenario where, yes, he cares about Tesla and its mission of, transitioning the world to sustainable energy. No question about that, right? I don't think anyone here can say otherwise. But he also cares about other things. He cares about SpaceX. And in the past, he's talked about how in the Great Recession, he had saved $20 million of half of the payment from the eBay sale. And he had invested $20 million, 10 in Tesla, 10 in SpaceX before the recession. But then when the recession hit, he had to invest the second half of 40 million into those companies to keep him going, because he said that he couldn't pick between his children. And, maybe I'm sure that's the way he would kind of think about today too. He wouldn't want to pick. But if the board comes with a plan and says, we're going to give you one fewer zero, and he believes that that's not enough to achieve his goal of making humanity multiplanetary, then is that not a scenario that can materialize? Unlikely, but is more than 0% probable to us.
Yeah, I see where you're going, and I can follow your logic. The only reason I would disagree with you is that you have to first assign that he cares about money, and he just simply doesn't care about money. And I know that's hard for people to realize because he was at one point richest person. I get that. But once you sit in front of him, you'll realize like he doesn't care about money.
No, that's not what
He just
that's
cares
not
about accomplishing his mission.
that's not an assumption that I need in what I'm saying. That's not part of the logical argument. What I'm saying is that if he believes that he needs an X number of amount of money to achieve his SpaceX goal or other goals, even if he's not going to use it for personal reasons, right? And the proposal is below that X amount, that doesn't mean he cares or doesn't care about money. That's not part of the conversation here.
I think it is, and I'll tell you why. Is that you're assigning a probability that we will become multiplanetary before the Earth climate changes so much as to extinguish humanity, correct?
I'm not assuming anything. So if you believe that's the case, then yes, that would mean Elon would probably prioritize staying at Tesla.
Yes, that has to happen first. You have to solve sustainable energy first, and then you solve multiplanetary. Those two things have to come in that order.
I agree. Okay.
Yeah.
Okay, that's a real good point. All right, Joey, and then Sawyer.
I just have like a quick comment or question, Yaman. Did you watch the Farzad interview with Not Financial?
No, I didn't. Can you summarize it?
Yeah, the quick summary is this not financial guy who's a lawyer kind of walked through the Delaware court case, and then what he kind of sees as the most likely like scenarios playing out, and I would just recommend watching that because I think that's been the most informative thing I found of like where we're currently at.
Okay, can you give us a few sentence TLDR?
Yeah, like his base case is that there'll be another, or the, because the key thing to him is a rescinded, so it can go to the board again, and then it can also get baked into another plan.
That makes sense. Thank you. Thank you, Joey. All right, Sawyer, welcome. How are you?
Hey guys, doing good. Thanks.
We talked about your posts earlier. We talked about the 2.2 million recall, that just about the font size. But then there's another recall going, or not a recall, but another issue going on with NHTSA.
Which is?
It is at the top that says NHTSA agents upgrade probe into Tesla power steering loss. What do you think about this one?
Oh, I didn't actually see that one yet. Interesting.
Okay.
I mean, it's pretty common for like probes to get upgraded at NHTSA, so I don't really make much of that. Lots of probes in the past have gotten upgraded. I don't agree with like some of the things that you have to do as an auto company in the U.S. when there is a recall. I don't like that there isn't a distinction between software and physical. I don't like that Tesla is required to in the U.S. send out paper mail letting you know of the recall. In Canada, they don't have to do this at all. And things are just fine. So, and no one reads those things anyways. They're not going to open them. Like, they don't care. So I'm hoping, there will be some changes in the future.
Okay. Wes?
NHTSA does keep track of which recalls are physical and which recalls are software, and they do a yearly recap of that. I do wish when they do issue a recall that the note would have to say that it's software. They'd have to say in the title. This would be like a regulatory thing where they'd have to put that it's a software recall, because there's more and more software recalls now.
Yeah, you're right that they do make that distinction. The problem is no one really looks that up. And then like last year, for example, Tesla recalled, I think, 2.2, 2.3 million vehicles in the US. 99% of those recalls were and vehicles that were recalled were just for software updates, and only 1%, or roughly 20,000 units, were physical recalls. So really if you listen to for instance, my brother texted me this morning. He's like, hey, what's going on with the Tesla recall? He's like, all Teslas are being recalled. I'm like, they're literally just increasing the font size by 5%. So it's like the media is convincing a lot of people that Teslas are unsafe with these headlines, but this doesn't need to happen if there could be a clear distinction between a simple over-the-air software update fix. I don't know if you can still label it a recall, just put a software recall, and then just a physical one. That would help. That would go a long way, I think.
Yeah. I'm like, why do you think it needs to be called recall? Like, why the software version? Why not even, if it's a free software update, why not call it recall?
Yeah, and like with texts being updated, they're not being recalled, those texts. Like they're just increasing the size of them. So the word recall doesn't really fit that. I don't know. It's weird. As others have pointed out, the word recall should be recalled.
All right. Can you guys hear me? All right, there we go. Can you guys hear me?
Yep.
Okay. I had a connection issue. All right. So, Sawyer, Troy says the 6,000 produced in 1 week is because They stopped production for 2 weeks starting this Monday. I assume they worked 7 days before that instead of 5. So it was a one-off. What do you think of that?
I don't, it's obviously Troy knows more about this stuff than I do, but I specifically worded my tweet to make it sound like it wasn't a recurring production rate, that they had just done this like once. And he's probably correct that they might have just tried to pump out as many as they could before this 2 weeks shutdown due to the Red Sea conflicts. But Troy sees more data on that. He follows that data closely than I do.
Okay, got it. All right. We talked about the price cuts in Canada. Looks like an amazing deal, according to James Cat and others. We talked about
Yeah.
Sawyer's post that APR percentage dropped by 0.1%. And then we talked about Charlie's graph that shows average price of a used Tesla is now less than $35,000, which is incredible. I mean, that's an amazing deal, down
So
from
so
68,000. Go ahead.
So that's a little misleading, I feel like, because obviously as Tesla's fleet grows, it gets older and those older vehicles become older. Naturally, their price would go down anyways, even if there weren't price cuts. Obviously, not to the drastic degree that it did, but just showing that chart over and over every single month is not necessarily the best, not the clearest picture of reality, I guess. Just because the fleet's growing older, naturally, the value of the cars would go down too.
Yeah. I mean, that's a good point. But who cares, right? He's advertising for Tesla. The primary issue right now for Tesla is that people still think the cars are expensive, even though a growing number of people realize they're not as expensive as they thought. So thanks to Charlie, this tweet probably got hundreds of thousands of views. Every month,
Yeah.
he's kind of sending out an ad for Tesla. Hey, you can afford a Tesla. I think that's great.
Yeah, no doubt. And if you can find a used Tesla for under 25 grand, you can get another $4,000 off in the US via the point of sale rebate credit.
Yeah, exactly. Yeah, you can get a Model Y now on the new inventory page for about $39,000 before the credit. Any updates on
Yep.
the point of sale credit issue?
Which issue was that?
That the IRS website was, they're kind of working on the IRS website. There was some clunkiness going on there, some friction.
No, I think it's all figured out now. Everything's good to go. Oh,
Okay.
they did extend a deadline to middle of February for like filing for people for last year. So a lot of people were freaking out a couple weeks ago because they didn't get their paperwork in time for the 2023 credit. So it's been extended for those who don't know.
And I have one more question for you on the credits. So I was looking through the new inventory page today. Okay. And I had a back and forth with somebody. And let's see, actually, if Machine could come up for this, I would appreciate it. He might know. Maybe he knows the answer already. So my assumption was that the Model Y, the entire trims, all trims qualified for the $7,500 point of sale credit. But if I go onto new inventory page, the rear wheel drive doesn't appear to qualify. So the back and forth was between whether that's due to it being a demo vehicle with a few hundred miles on it, or if it's something else. So can you confirm that all trims of Model Y qualify for the $7,500 point of sale credit, or if some of them are excluded?
Yes. So this has been like this since the beginning of the year. If you go to the IRS website or the fuel economy website and you look up which Teslas qualify for the EV credit, it specifically states that only 2024 rear-wheel drive Model Ys qualify, and not 2023 anymore. Whereas last year it was 2023. So the leftover inventory of the 2023 rear-wheel drive Model Ys don't qualify anymore. I don't know why that change happened. And it's not, on all the other Model Ys do qualify 2023 and 2024. I don't know why only just the rear-wheel drive is the only 2024. It's very weird to me. Maybe there was some change or something in the rear-wheel drive that the others didn't have that caused it to not qualify. I'm not sure, but that's why it doesn't qualify in the inventory. I think as they work through their older rear-wheel drive inventory, I think that the new ones should qualify.
Okay, great. Thank you for clarifying. That makes a lot of sense. Thank you very much. All right. Any other questions, comments? Please request to speak. Otherwise, we're going to end the space in a few minutes. Sawyer, anything else on your plate? Any updates on compensation plan back and forth, or discussions, or Cybertruck, or V12?
Not really. I think on the compensation plan, it's sort of been talked out. I think we'll just let Tesla do what it needs to do, and we'll just wait to see what they decide.
Okay. All right. Then we can probably end the space. Thank you very much, everybody. On Sundays, I hold a space on my Alley Analyst account that focuses on solving homelessness. Right now, we're doing a very preliminary read of research papers. If you care to be part of that conversation, you can follow Alley Analyst, and I'll pin at the top of your screens the account as well. So here's the account. Alley, spelled as ALLEY, Analyst. So I'm going to hold 1-2 hour spaces on Sunday nights to get the conversation going. Last weekend, we read a research paper about how Finland or what is attacking the problem with housing first approach instead of making housing, permanent housing, a reward for meeting some sort of step. We talked about the economic implications, the cost structures, and everything. And then this weekend, I already have a paper in mind that I want to go through and kind of see what the puts and takes of the discussion is. Yeah. All right. That's all. Thank you very much, everybody, and I will talk to you next time.